What's up, everybody? Price action's kind of shit. I haven't been in a huge hurry. Just because we've been consolidating so much. Getting a confirmation, though. It's not 4:30, it's around 5, so not uncommon. Jeez, I still got all this stuff here from reading order flow yesterday. Uh, 3-day low. We're at our 3-day low from our previous framework. A 15-minute chart. Let me get this. Auto fit. Q's giving us bullish vibes. I'm really interested in trading some Forex today. Got this NWOG below 108.20. We hit one, we typically hit the other. 108, 500. What are these lines? Let's see. It's not what I want. Stock setups anyway. Short. CAD should be same thing. Big move. Got this end dog here. Got these upside targets I'm interested in. Some Feigenbaum projections. That 3-hour. Same chart, just looks a little different. Oil's moving. 5. We like 5 o'clock as our Judas. Like to see a 5 o'clock Judas. Let's hang out with YM a little bit. See how YM's doing. So we got some news today, 8:30. So yesterday being an expanding day. And we're in this consolidation in London today. It's not as fun. Retrace grid. We got a couple folks in here that are new. We got some classes going over how to use your bazooka, aka your drive. I like the dynamic and auto settings. You got to look at this. You got to study it. You got to make sense of it. I like having colors on here. It gives me about a 60 to 70% probability as far as the direction of the session. So it's just one of, like, my opening and closing lines on thick, like showing off the DR and IDR as much as possible. Statistics are good. Like to calculate for the retrace. Target success typically would be 1 or 1.5 standard deviations. Could even be 1. Target fail would be, 50%. 50% line. Different styles. I like red and blue. If I do that, I need my trigger to be a different color. We're going to go off of a straight DR model today. Looking for mechanical setups. Meaning the orange lines where we're looking to pull the trigger. Let's see if there's a couple folks in here. DR chat. This, how do I can't hear anybody. Are we live on the I think I went in the wrong room. Could have gone in the other room. That's okay. DRxICT matrix axis. Live chat. Okay, yeah, we're in live chat. Yes, now we are. Okay. BKD, can you see both? If you guys want to holler at me, just jump into the live chat for now. I'm checking that up. I got that on the screen. If you don't mind. Got a little cup of coffee. Getting the day started. 5 o'clock is a really good time to trade. If this is when you stock setups the way we do, the way I do. Early indication of long. It's not early anymore. It's going long. Yesterday we called out a few of these areas. Seem to be touching them pretty precise. We gave a couple options. I'd like to see some higher prices today. And Q's giving me signs of some higher prices as well. Euro dollar. the bearish vibes. Where is my drive? Dollar with its first push. This is a really tight consolidated range. It's because we got news catalyst in just 3 hours, 3.5 hours. Got some unemployment. If you go to resources facts, we've got a MyFX book there. You can see the correlation within pairs. You can also see the news calendar. So MyFX book there will give you the daily kind of red or color folder news. We got some red folder news 8:30 today. So, I mean, we're in a very, very tight consolidation. It's not been fun. But when this is the case, I'll show you a few of the things I like to do. We got 3 o'clock. I love my time matrix, but we'll go to the 5-minute range. 0% retrace coming off of the trigger. We hit our first. This ends up being a full standard deviation because it's a barcode. We'd want to go back. Euro dollar. It's a good day to look at the data with such tight. I mean, say that. Here, let me pull up. I'm gonna jump in on my phone. See if we can't try and get a little voice going on. Because I obviously jumped into the wrong room. What's the easy way to do this? What's the easy way to do this? I don't... 2.1, we got a fair value gap here. This is where we're going. We know where we're going. It's just, where's your entry? How do you get in? I think it's a tough entry. Wow. How do I have that, of all things, pulled up? Tough entry from here. We'd be waiting for a retrace. Come off this line. Come off our 0% retrace. We'll look to anyway. Let's see if we can't get lens up. Got lens. It's gonna be so hard for me to juggle all of this. I gotta at least get it on the Discord. Okay, switch screens. Change windows. Lens. Let's go to lens. Okay, you can see lens. Now let's change the screen. See if I can change the screen. There's lens for the Academy folks. Now we go back to lens. Give me my sign in. Last name's Douse. You wondered. Let's check out the euro dollar. It's Thursday. First, let's look at the week of the month. We'll start there. Let's work backwards. What week of the month are we in? We're in week 1, 2, 3. So we're in the 3rd week of the month. Let's see what our data would tell us. for Eurodollars ODR. 4:39, we get a confirmation candle. What time was our confirmation today? I gotta switch through so much stuff. It's 4:50. 4:50, that's fine. 96 confirmation, 73% true, 51% long, returning to the 90 into DR's 90%. So the third week we got a 73%. That's, we got a true false. That's not going to change this data. We're still just looking at this top. I don't really need to mess around with this. So week of the month, 73% accuracy. It's not bad. Month, we reviewed this previously, but I'll show the new folks, anyone who's here. By month, August is a pretty decent month. Pretty sure we're around 80%. 75% true. 75%. It must be taking into account some of the data we've had so far. I thought we started the month with a little better record than that. It's still 3 for 4. It's not bad. So go by a day. Go with a Thursday. We'll go with a true short. It's 450 we said. So we're going to look at this data. We're on Eurodollar. 1.6 extension. Let's look at the time real quick. Max retracement 540. Still coming up. So once we're short, this is our bullish order flow. This is a bearish order flow. 5 o'clock, we're getting that extension right now. 5 to 5:15, that's what's happening right now. How many counts do we have? We have 4 of 43. We have 10% of all of our extension data is coming within this 15-minute bucket. So we've got a lot more retracement values. Kind of feels like the barcode. 5 of 43, 10 first. So we've got 8, 18. 18 to 43s, almost, that's just over 40%. 40% of all of our retracement data is coming in this first window with 2. We got almost half of our retracement data coming in this very first window. So for those of you who don't know, you look at your counts within the bar and you look at your totals. You're like, but that's not a lot. Well, this is a very, very specific filtered data set for this very specific asset. So there's a lot of these counts for a lot of different places, and the points are you're utilizing the mode and the median, and you're utilizing the mode and the median. These are positive values. If they're not in the color here, this is the range. Your range is right here for retracement. It's the light blue. Outside of the range, what appear to be false days or not retracing back into the range, we've got a mode retracement here of 1 to 2. So there's a very good chance we do not retrace back into this range. Try to extrapolate a little bit more data. I'm just looking at how far are we gonna go. I'll come back to that chart in a minute. We'll clean it up. We'll do it textbook per the data, per the model. Yesterday we flexed on some ICT models. It was a Wednesday. We were in sync. A lot of those models were just playing out beautifully. Today, how we get in sync on a Thursday, consolidated range, we just mechanically do exactly what the data tells us to do. So 540 is our max retracement. We're coming up on that time here shortly. 5. These are 3, 6, 9 5-minute candles. These are in 15-minute buckets. You want to look at your mode. You want to look at your highest. Our median retracement before the low of the session is going to be at a 0.1.2. Interesting. Me gusta. So median retracement after 0.5, this is what we've hit again outside of the range. There is probability, but our highest probability is that we retrace outside of the range. And that probability is going to be almost half. So we have almost a 50% chance And what I'm looking at are, if you notice the counts, the 5, the 6, and the 5. So 5 and 5 is 10. 10 and 6 is 16. There's 38 here. So I do the math quickly. 16 times 2 would be 32. So we're just under 50%, right? So we're 45%. I do mental math. I don't really try to use a calculator. It's kind of just intuitive to flow. So our max extension isn't that deep. Look at that. Max extension's only half standard deviation. That's not a lot in our mode. So we look at our mode, we look at our median. It feels like we're trading a barcode today. It's kind of what it feels like. But we've got a 1.6 in our second bucket here in the extension. That's what we're going to hope for, anticipate for. Then we've got some 0.1, 0.2, 1 full standard deviation. I do believe we've come close to that already just in the single pass because the range was so tight because we're trading a barcode. It happens. It's what the algorithm does at times. -2 retracement. So the 2 to 1 to -2, the 1.6, our low of the session, our median retracement before the low of the session. So we're looking at our retracement before the low is formed. So we want to see what that max will be. What's the extension before we get that? So this helps define our second bucket, the highest point in which one we're going back and forth. What's the highest point once we have a confirmation candle? We get a confirmation candle. What's the highest point before we drop in this regard? That highest point is going to be here. It's also going to help understand this. So max extensions around 730, 7 counts. So that were 49, that'd be 1/7. It's about close to 20%, close to, just under. So 830, yeah, we know the news catalyst is going to kick it up today. So it's going to kick it all up a notch. Yesterday was a nice expansive day. We're expecting a reversal today. So let's get back to trading view. There we go. So now we come here, we're following data. We're going to jump in here. We're going to look at our trigger. We like a 0% retrace. I don't know if that's going to be our highest probability. It still probably is. Instead of going to the 2.1, we're going to go to 1.6. We're going to hope we get that. I personally like dynamic, and I also like the auto. That's me. I don't have to think about it. It just says how far it extends. Then the ADR, ODR does not matter. You don't have to mess with any of this. You don't have to mess with general settings. This is going to be depending on what you're really looking at, right? This statistics is what you see over here. So we've got the last 200 sessions right here. And within the conditions that I have set here, we'll target success. Let's go to 1.6. 89%. Fail target, half standard. This is a positive value. Target fail, 0. Retrace grid. So last 200 sessions is what we're looking for. We're coming up on where I think where I honestly think we're going to go. Let me throw in just one more. There's a retrace grid I didn't add. 1.6. I mean, our best bet is going to be any form of retracement in here. This is just such a tight range. It's tough to trade this, guys. I mean, in all honesty, I don't love these conditions. But we just did the analysis, so let's follow it textbook and let's see what the model presents us. So we're triggering off of the DR, meaning when we get a 0% retracement, even though our mode retracement is 1, this I mean, we got such a large IDR today, such a tight range. The data isn't optimal. For me, this is a tough trade. Just conditions. And how you know is you just kind of, you get used to looking at, and so script does what script does. Then I take my DR range calculator instead. Put it on the DR here. Okay. If you guys want to see what this looks like, this is just a little bit more of a grid for retracing. Feel free to screenshot that if you'd like. Gives you a solid idea where these retracement values could be. It's kind of inverse though. I really think it would be technically, and depends on how we measure it. This just feels inverse to me. I think it is. It's inverse, but I'm not going to mess with it too much. It's still early. That would take it to the DR. There we go. The data reads this is a positive value and this is a negative value. That's the only thing I don't like from a classroom sense. I understand what I'm talking about, but yeah, I don't know if I'm going to use this one. I got others, so extend right. I mean, it's okay. These are still negative values. Why it's not pulling up. Let me add you again. See if I did anything. Got our retrace right here. Our trigger, we've already said 0.1. It's coming off the DR. That's the right measurement. It's 0.1, DR is right here. 1's going to be here. Looking at some data. Max retracement. Pull up your Eurodollar. Just extension 720, our retracement's at 540. So really looking at 540. I'll create this little window right here. Wow, that's an interesting color you got there, buddy. Looking at retracement values, our highest values 515, 530. We got 3, 6, 9. Our highest candles are here. We hit a half standard deviation. We're expecting 0, 1, or 2, 2 to 3. That would be around now. We got the 1. I like that other one. Range calculator. We'll turn off some of these. This one's different, but this is a really good fib, guys. So if you want to screenshot this, it's kind of money. I really like it. So I'll put in the -2. I'll put in the -3. And then I'll put in the -1. And I'll turn off some of these other ones we don't need. Oh, there it is. We went to the 3. Look. Shit. 3 is our window. We're still good though. We're in our window. 530. Looks like we could have within the data. What are we saying? 5 o'clock, 5:15. So that's our highest count. Our top 3 buckets are right here. Our retracement, our highest one is O, is 1, 2, and then 2 to 3. Look at me, slow on the damn draw here, Kit. Come on now, buddy. Not a fan of missing. We're all right. We're here to learn. I do like getting some trades in though. Thursday, gotta be patient. News is gonna be our catalyst. We'll get to turn around with the news. So probably won't get it on this live stream. Just the way we're printing today is mad. We know where we're going though. We've got the end dog projecting some price, some five. Where was my end dog? End dog and my end vogue. Don't need these shaded areas. I like seeing these thick. Yeah. No shaded area. You can be a little smaller just cause. Make you a little darker blue. We like the pink. Make you purple though. Zoom out. Where's my end dog? It's down here. Should be. So we have 1, 2, 3. I mean, these other numbers are just, they're numbers I like, but relatively you're talking about the same thing. Whether it's 1, 1, 4, or just 1, 0, it's not going to be a huge difference from the Fibonacci scale. If it's 3 or 0.333, but a max retracement value to 530 to the 0.3, some of our highest data. We're already at the 1.6 extension, which is annoying. because it's such a tight range. It means we don't really get to trade it, because one single candle is gonna define the whole darn thing. So that happens, though. That happens. We'll stock some other setups. I wanted to show you this data, though. Y'all understand and drive and the data are very important. So let's just go over things again real quickly. This box is telling us while it prints from open to close that there's a good chance it's going to go bearish. It's not 100%. Nothing is. It's just probable. So we're looking for shorts when we see this box. We come up to the open. We come up to the close. We pretty much come up again. We don't really mess with the IDR, which I find interesting. Typically our entry is going to be around here. That's why we have this blue line. But price hasn't given us our entry. Doesn't have to. A range like this, it's kind of, I mean, we have rules and we have a very specific model, and we're looking for a half standard deviation, or when it's this tight, you could say 1 because it's just so damn tight. But you're looking for this as a bucket 1, a retracement into bucket, or a max retracement for a full extension. This is all super condensed, so we get a bucket 1, we get a retracement, we're going into a bucket 2 right now. And our max retracement was this window. From a time standpoint, we had a relevance. The 3 highest candles were here, I believe. If you look at your data, you'll see where and how this time frame for a max extension was the highest probability. Now we go to our data. We're extending past what was the mode. 2.4, 2.5, 1.6, 1.7. This is just unfortunate. So from 445 to 530, you can add your retracement, your max retracement. And then when you're looking for your max retracement, which is the first bucket, you can add anything from the +3 to 0 all the way to the -2. So I would put, oh, whoa, hey, don't do that to me. This is after the fact, but I'm trying to show you how to get some of this data. You would create this window as this is confirming, which I obviously wasn't quick enough to the draw today. And it is what it is. Euro dollar's not giving us the vibes. GPP, oh, this is the one I wanted. I think this is going bearish all damn day. Oh, yeah, I think we hit the Tuesday high of the week. I anticipated from our review of ranges where and how I felt we were in a premium. This was yesterday. Where and how I thought we were at a premium and we needed to hit this. I don't know why I didn't just focus on this asset today. We think we know where we're going here pretty clearly from the beginning of the week. GU's going to do what EU did yesterday. GU is a better asset to trade today, obviously, but everything's been a barcode. It's easy to say that once the move happens, but 450. See, I like 5 o'clock is where I like finding the move. I mean, we like to start trading at 4:30, mapping out where we think the 5 o'clock move is. This has not been easy price action. It is a red box though, so you could and should be framing up shorts. It's, I mean, I'll just tell you, I think today's a tough day to trade. I mean, it's a tough day to trade this session. And it happens. I mean, it does. It's a tough day for me coming off the N dog. So NQ, I mean, indices are a little more ES. I think we hit a buy side curve here. That's what my call was yesterday. So I'm looking in the chat if you guys got any questions. I mean, we're not going to do a massive marathon run today. We did a pretty good one yesterday. I got to make sure we get that uploaded or find out with the support team where it's at in the stage being uploaded. Yesterday's live stream was legit. Really was. We're looking at some data. I'm looking at some indices. I'm pretty much just stalking setups if you want to know the truth. This is not optimal price action in my opinion. I mean, yesterday was pretty clean. 5 o'clock though, we're looking for lows to form. We want to see lows to go the YM. We might just go through this whole data exercise again with an indices with NQ or ES. And that's what we'll do. We'll do NQ. Well, let's see what's the best one between all these. We have confirmation. We have confirmation as well. I have quite a few questions, but want to have more clear. So going over some videos. Yes, I mean, it's bearish vibes. Bullish confirmation. Pretty deep retrace. Back to pretty much 90%. So we're going to go over the data one more time. I think ES is a perfect example. That's what we're going to do. We'll set up some of these windows. I have some key levels here as well. So very first thing we're going to do is just make sure that our bazooka is configured correctly. And I mean our drive. Dynamic auto. We'll add an extra component. I'm just going to put 2.0 here. And then we'll see what it says. Statistics, we turn that off, so then our setup is not really, it doesn't matter as much. If we turn this on, we put it in middle right, give me a little better view. The last 200 sessions, which again, you will see you can configure this. If I put 250, it just disappears. It's going to depend on your trading view as well. But ODR, this setup, 0% retracement to the IDR. These are your configured targets. So if the target success is 1 standard deviation from the IDR, put it from the DR, then the target fail would be a negative half standard deviation. Negative would be, no, I mean, we wouldn't want that much. Put negative 0.5. Oh, jeez. Didn't work. I'm not so worried about this. This is just for you guys to see. Negative. I don't click any of this stuff personally, but you can. So this is our trigger rate. Let's go back to the data. Let's do this again. Okay, change windows. Give me lens. Go live. We got one there. Now OBS. We have to do it there. Then we have to go back to the data. Now we're going to go to ES. From the ODR, we're on Thursday. I think we got a long going on. We got a long going on with a confirmation candle at 440. So very similar. First thing we'll do is our extension times. 445 to 530 are our first sets of counts. So let's just do these counts. Count 5, count 6, count 4. 15. 15 of 50 would be 30%. 15 of 57 is going to be just under that. So we're about at 20+% of our counts for a max extension long are going to be happening between these first 3, 6, 9 candles on a 5-minute fractal. So we're getting a good chunk of percentages of our counts coming right after the DR forms. Not a huge shock. See a lot more counts coming. 7, 8, these are not to scale. So depending on if we're going long or short, in this regard we're going long, so this is bullish. In this regard this is bearish. So we're looking for our max retracements, our bearish order flow to come in. We've got 8 and 8 is 16. We said it was 20 and we said that was 50, it would be 40. Right? So right around 40% of our retracement values are coming in very early. And then we have low retracement values between 515, 530, and 545. 3, 6, 9. We have a Ooh, I like this. I like this. So we had a max retracement. This is obviously 50% of the range. So where are we going? Let's just look at some PD arrays here. Let's get on a slightly higher time frame, see if they pop out anymore as far as relevant. Oh, is that a volume imbalance? On a 30-minute chart? Well, we know where price is going. I love when the algorithm tells me that. High time frame volume imbalances. Near sessional liquidity. Yes, please. Hey, you are not where I need you to be. Oh, I like. Oh, that's such a good tell. Oh, I love that. I get excited about volume imbalances, guys. Probably think I'm a little wild for that, but they are powerful, let me tell you. I done learned that that's a very powerful PD array. So I'm looking for... There's another volume imbalance here, though. That's a bummer. I think we have magic Vibs up, which is good. This is a free indicator. I highly recommend it. Highly recommend it. If you don't have it, get it. Implied fair value gaps is another one. Ooh, I like. Oh, I like that. Oh, I like that. It's a nice little. What do we call that in the resistance and support world? See, this is unclean though. This gets cleaned up here though. It does. This gets cleaned up here too. So this retracement cleaned these up. So got less love for those vibes. Let me just go with the basic framework. Takes a minute to thank. Okay. This is our box. This is what we're trading in, ladies and gentlemen. 5 o'clock. It's been very interesting. We got this PD array. Got some higher time frame vibes. Down close candle, we buy this. It's hitting our trigger. This yellow's our trigger target. We want to trigger off of this and buy. Our stop would be right here. I'll slide the stop. It's 44228. What is it? 2825. 25. Kit, you're crazy with your tight stops. We'll go with at least 5. That's it. That's it. Yeah. Give me a little deeper retrace here. I haven't looked at the data, but we're triggering off of I'll slide this up. 426. 426. We don't need 10 ticks. I haven't had the luxury of trading my asset for so long. I'm going to trade this with a funded account. I'm not today, but I will. I do other days with Forex. IDR is... I mean, I'd take this trade. Then I'd slide this up. It's 4 ticks. Our validation point is going to be far higher. Two-tick stop. We're right on this IDR. Then the idea is where'd we come in here? We'd run it to half standard deviation. ES is my jam. I think we're accurate with how we have our stop. How we have our entry is just a little bit below. There we go. It's our entry. Now see, I can be wrong on this a lot of times, and I wouldn't continue going in with 5 contracts, but the first trade idea I do. I go in with a little more. But the mechanical trade is that we fill this PD array, and we're coming on to 6 o'clock. So we have confirmation, we have our first retracement, and we have a reason to think it's going to go way above us, but we would want to mechanically hold it to here. If we get it, kind of running it pretty tight, but that's how I trade, especially ES. ES, we manage very tight stop losses, very tight. 2-2, where's the open and close? I don't see them. Probably should give this a little more room to breathe, but yeah, it doesn't need to be. Got the implied fair value gap, kind of giving us some bullish vibes. I mean, I'm going to run it tight because it's ES, and it's really how I prefer to trade ES, so. Do have a reason to come a little bit lower. We want to bounce off this trigger. I mean, at 125. Yeah. Just ride it. It's going to go or it's not going to go. We know where we're going with it. Probably not a lot of people taking these types of trades. Well, I know my mentor, M7, he's definitely taking these trades. But 2-tick stop, you ain't going to see that very often. We already got a little 3R trade on this R. I brought this here. We're at 3 right now. We caught this LR, which is what I thought. Could peel one off just to pay for the trade. Pay for the trade. I was slow to the draw on it. I should have taken it at the top. I still think it's alright. But versus rolling my stop, since I really don't have more than 2 ticks to roll, I wanted to, if I do stop out, I was trying to pay for the trade, but we're only at a $75 risk, so we've taken some risk off. We took something. Like I said, I think we paid for the trade. $50. Yeah, we did. We paid for the trade. Got a pretty good win rate going. Not that it matters. It's paper. We hit 50% of that fair value gap, which was the right idea. I mean, the only reason I wanted to show you guys to pay for the trade or to take a partial is just pretty much if I lost $75, this whole conversation would have cost me $25. And well, the trade plan only costs you $25 with 5 contracts on ES, then I think you're doing something right. Yeah, I can't roll the stops off, and I came in heavy so that I could at least take a partial. Oh, are you kidding me? I'm on lens? Oh, you guys missed the trade I took? We hit 50% of that fair value gap, which was the right idea. I mean, the only reason I wanted to show you guys to pay for the trade or to take a partial is just pretty much if I lost $75, this whole conversation would have cost me $25. And well, the trade plan only costs you $25 with 5 contracts on ES, then I think you're doing something right. Yeah, I can't roll the stops off, and I came in heavy so that I could at least take a partial. Oh, are you kidding me? I'm on lens? Oh, you guys missed this fucking trade I took? Oh, shit. 2 tick stop. Damn it. I'm on lens. Shit. What a phenomenal trade. You guys missed it. You didn't miss it. You're seeing it now, but 2 tick stop. It's pretty good. Too bad I didn't have it on video. We're alright. You can see it. This could come back on me now. It hit 50% of that, but I want to see it hit half standard deviation. We took it on the trigger here. It's a little 8R trade, had 5 contracts on with a 2 tick stop. So, still on lens. No, we're good now. Alright. You guys almost missed that executed trade, but you can still see where it's at, where we got in. That's my fault. Sorry, guys. It's tough to manage. It's tough. tough to juggle. Trying to trade and flip screens and everything else. We only see lens. I got you. It's my bad. But now you see my 2-tick stop loss, 8R trade that will cost me nothing. ES is nice. Forex, it's so hard with the spreads and the brokers to run a tight stop like that. It really is. My biggest issue is it's not even an issue, but if you look at our fair value gap, we hit 50%. We're still going to go to the half standard deviation, and we're still going to go to the volume imbalance up here. I'm not going back to the data right now. I'll look at it. We're in a trade, and the trigger hit. So we came up to the 0%. We confirmed. We retraced to 50%. And then we came here. We hit this trigger. We buy on down close. We bought on this down close exactly here. The R tool is configured per the executions. So the R tool is showing us if this goes our way. It's an 8R trade. Very, very little risk. No drawdown. No drawdown. We waited for the down close to buy. That's why we're here. I'll go to a 1 minute just to ensure. I don't think I had any drawdown. Yeah, no. That's precisely what I wanted. So, bought on that down close. Right here. And it literally left. So, Magic Vids is nice. I didn't have that up, but this as it stands would be I mean, I already took I took 2 off just to pay for the trade, pay for the idea. But yeah. A 2-tick 0 drawdown trade. If it goes my way, we hit. Even if it doesn't matter. Go back to 5 minute. We don't need to sit on this. But this is the model that you're learning. This is the model that we're teaching. This is the 0% retrace. So we're coming up out of the range. We're triggering the off of the DR lens. We're hitting the DR lens, and we're going mechanically exactly to a half standard deviation. We know there's more to it. There'll be more meat on that bone. I might leave a runner, or I might build back into the position. But yeah, I think regardless, it's 2-tick stop 0 drawdown. We'll extrapolate more data. I feel like I messed that up. I'd rather just kind of watch this trade. I know you'll learn, but let's see if it hits TP. And I say let's see, it's gonna. Pretty sure. So ES, I have not traded ES for so long. I love it. Didn't lose. Didn't make a lot of money. It was a good entry. Paid for itself. Stayed green. There's more meat on this bone. But this fair value gap will probably, we hit the 50% of this one twice. retrace and we'll get another entry. We're at our average max retracement value right now, 615 per the data. Go ahead and pull up lens if you want. I don't want to have that same debacle. We hit the half standard deviation. We have not, so we don't look at that. Median retracement before high of the session is -3 to -4. We hit that since we've had a confirmation candle. Yes, we have. Confirmation 3, 4. We went to 5. 1.4 standard deviations. We don't really have a huge extension here. See if we hit this trigger one more time. We've got some open and closes over this 3 pulse wave, aka a wolf wave. 1, 2, 3, 4, 5. This would be 5. I don't think we get much deeper. Would expect maybe another opportunity off this trigger. I mean, green's green, if you ask me. Would not expect you guys until I see some reps. I mean, I need to see some reps of you guys back testing this, proving this model is valid for yourself. Got a little volume imbalance here we're filling. Got a repricing candle. I call it a repricing candle. We got another one here. So highlight this range right here, just cause. Give it its own little color. Meaning I think we'll get an opportunity to trigger one more time. So we would maybe set a limit order right here. Let's see if we retrace. We're at 615. Next 3 candles. Potentially on a retrace. It's our median retracement value. So we've already hit our max retracements. We have not hit our extension values, so the idea of going long around here, you'd want to come off. I don't buy longs on up close, only on down close candles, so we would want to see highlighted level. We'd want to see, if you're learning to get comfortable with the model, then you can have a little bit bigger stop, run it to 1R. Want to see us get here, probably run a 3R trade potentially. We're in our median retracement window right now, so these 3 candles, we'd expect some sort of down close. Want to see a trigger. We're hitting the 50% again. Let's get these 3 candles right to there. We get a re-entry, it'd be right there. Off this model, you can get a couple entries and exits typically. This AM box is going to get bigger as time progresses. This is our time window. Typically, I trade in this green window right here. Yeah, I think if we go, reason I have this highlighted, this is where we're expecting the retracement. So we really technically want to go in right here on our next opportunity. If we get one, this little window, cool. We don't. Trade paid for itself, it turned green, which green trades, in my opinion, never lose. Can't say coulda, woulda, shoulda made X, Y, or Z. Personally, that's not my approach. Want to see a larger, want to stuff this range with some buy side and sell side. It's had a little sell side. It's had some buy side to it. So looking for a decent impulse down within this candle or the next. If that happens, if we get an impulse leg down to the trigger, then we will re-enter the trade. Notice this volume imbalance here. It's a PD, discount PD array. Could hit here, could hit here. Haven't hit here yet. Before we hit here, I think there's a chance that we hit here or here. So even though we were on sides with the model, with the configuration details, giving us a high statistical probability over the last 200 sessions. The last 200 sessions go from January, February, March, April, May 16th to today, real time. It's given us the ODRs this model occurs 76% of the time. ODR has a 4-point range. I think this range is 28 to 19. It's a little bit larger statistically. So looking at the just due to the data and the median max retracement being 615, be between 615 and 630. So we be looking at these next 3 candles and some impulse leg down. So put this, we'll make that a little red. Oh, a little red. We don't have any. We have a max retracement of 0.4. So if we get any sort of retracement, if then, conditional statements. We want to build that into the logic and framework of how you see price action. Setting these relative equals up, kind of balancing this fair value gap, the lower quarter of the fair value gap. So if I wanted to visualize it, I'd visualize it like this. PO3 range just on this fair value gap. I want to see our if-then statements, where and how order flow matches up to our inefficient range. So another 5 minutes on this candle. Probably we'll play out this trade idea, see how it goes. We'll probably wrap it up here. Saying we had an opportunity to see something. Go to a slightly smaller time frame. See where and how the magic VIB. We bounced off that. Go back to the 5 so we can see our DR levels very clearly. So this lower quarter's balancing, meaning we could go to the top half. If we do, we'll hit that extension value there. We will have not optimized the trade, but if you go green and you cash out green, then you don't need to play the FOMO game. For me, it's just about getting in sync. There's still going to be plenty of opportunities within the day. A live stream today will go, pretty much close to a 90-minute cycle. Still looking for this impulse leg down. It took 50% of that fair value gap we called out on the 30-minute chart. There's more to it. There's more to this inefficiency on a lower time frame. We're taking it from the 30. Projecting the 30-minute fair value gap, not the 5-minute fair value gap. And this impulse leg is playing out during its max retracement. Median max retracement, meaning there's a trigger. There's a trigger. We just touched it. And we're on a down close. Got a few PD arrays below. So our if-then statements are playing out conditionally. So I like looking at these flat bottom candles. I like looking at the flat top candles. That's why we highlighted this range. Could also highlight this range. Opa, sorry. Wrong button. Highlight this range too, is seeking both sell side and buy side. within its delivery of price. So we could have triggered down, which is nice to see. If thens are working out. Make you purple. We're in the last minute of our median max retracement value. Within time, 6:15. Not a lot of extensions. Looks like we're going to get some extensions closer to 7, 6:45, 6:45, 7. Start measuring the counts, how they're different. Go up to go down, down to go up. That line we drew is acting as decent support. Got another line we draw. Just add it real quick here. Could say this is discretion. Could just be how you see and read price action, print real time. So we're at the 6:30 price. So we'll be looking at this entry. Control Z. Be looking at this entry. Coming up over here. Let this print out. We got 6:30. Starting a new candle. Our retracement counts, our extension values don't really pop until 7:15, so I'll probably be looking at the long right around here. We'd want to see where is what I'm looking for. Is this tool? Yeah, here we go. And we want to see this hit here. Could go as low as here. Kind of what we'd be maybe thinking about. It's probably a little off. That's kind of what I'm visualizing from the PD arrays and what we're seeing. So that trade would have broke even, but we peeled a little something off. We were able to anticipate this order flow based on data. So go to your ES data. I'm not going to pull it up just because I'm bad. But look at your extension values between 6. You're looking for extension values during times that are greater for your extensions than they are for your retracements. 7 o'clock, they're still the same. Then 7:15 to 7:30 is where we start really seeing a disparity. So that's 7 o'clock here. Probably drag this out. For me, this is nothing more than getting in sync. getting in sync. And this line we draw it out, acting as support. This fair value gap is hitting. Got one more PD array that I think is going to be important. Now there are models where you'd be taking a trade within the range and you'd write it up. As a group, we're just not there yet. We're working on one model at a time. You need to get comfortable in reading data, understanding your probability. That's step one. That means you need at least 100 reps. Back testing what it is you see these live streams do, how I execute M7's methodology. Then you get comfortable with that, start to see how real it is. All we did is we hit equilibrium on this fair value gap, which we would anticipate, and we don't have bullish order flow. We don't close above this, and we kind of balance this range a little bit, and we still have things to project downward. So bear, little ICT. Yeah, probably take it to here. Just taking this whole kind of range, saying it's pretty much balanced. Might even take that one, say buy side and sell side are equal within this half of the fair value gap premium PD array. So we go from premium to discount. Here's equilibrium right here. So we're leaving the premium range, this projected range that we're tabulating, calculating, looking at. There's a couple standard deviations here. Core content, month 4, order block theory, open and closes, 3 standard deviations from the order block. We're looking at this as being just, if that were one side of this range and this were another side of the range, then that's balanced. So if that's balanced and price is allowed to leave the range, where's it going to go? It's going to go, I think we want to see it hit this discount PD array down here. So we're filling this fair value gap we had highlighted within the range, and we're also within our extension or retracement values, excuse me. We have a confirmation long, therefore extensions are bullish and retracements are bearish, be vice versa. We're referencing different models. So we have premium arrays, we have discount arrays within this micro fractal here, this range size. We could take the same range and call it from high to low, or high to low of our points of interest anyway. We'll bring it right down to here. We'll say this is the range that we're referencing. And when we say we project it forward, projecting it in time forward. This is a projected fractal range. We're dealing with micro daisy chain fractals, core content month 8. Episodes 3, 4, and 5 give you the idea of a projection, both on the y-axis as well as on the x-axis. You would want to be utilizing these if-then statements to create framework and logic. So our trigger point is this yellow line. It's unscript. It's actually the DR. So we want to take a trade from the DR, and we want to go a half standard deviation, hit our bucket 1. And within our bucket, we have some inefficiencies on the way. So I like to measure those. We like to measure those. So within all of this, we're just trying to get in sync. When you can call out these if-then statements and then the algorithm does these statements, then puts you in sync. So we went from 50% of our premium array to 50% of our range. Now we go into discount. We seek a discount PD array within this fractal range. We've projected both on the Y and the X axis. And we do have another trade idea coming up here. But we're thinking more around 710, 715, so a couple more candles need to print so that we could go from premium to equilibrium at this point, but from equilibrium, some form of consolidation into a discount PD array to then turn around and take price back up where? Back up to our terminus. And quite frankly, there's more meat on the bone. We'd like to see it hit at least 0.6. I think our mode extension. Okay, let me look real quick. Mode extension. Our median is 0.6 to 0.7. It's also 1.3 to 1.4. So we have the 0.5 very clearly seen. So we'll go to 1.4 as being our terminus for a day like today, giving us a very mechanical entry and exit. So if and when we get to the opportunities, there will be a few trade plans. We would take them all off this line as price leaves the range. We've got bias confirmation where we think we're going. So we're hitting the first projected target. We need to balance this range first and foremost. Just gonna have some consolidation at the equilibrium of the high and the low of this range. So we're just creating if-then statements and seeing if we're in sync, if the data is correct, if our analysis is correct. We've got 2 standard deviations. We typically, ICT teaches you have 2 to 3 standard deviations off an order block. So we're looking at these impulses down. This is precisely what we wanted to see, why we were peeling some off, just to take some risk off of the idea.